All right. Let me see. So, mastering the markets. This is your intro to forex trading, like beginners forex class with DBM. DBM is simply the Dibillionaire method. Welcome to the exciting world of forex trading. Today we will equip you with the foundational knowledge. Foundational knowledge actually means basic knowledge, simple knowledge to navigate financial markets. What is financial market? Forex trading, crypto trading, stocks, name them, different types, any kind of financial markets. This knowledge will actually teach you on how to what navigate your path. Do you understand? How to navigate, like how to trade, how to easily decipher price action. Do you understand? So because I name it forex trading doesn't mean you'll be limited to trading forex alone. With this strategy, you will be able to trade any kind of market, be it forex, be it synthetic, be it crypto, name them. Who is that person? Please, who is that person? Please, that person should mute his mic. My boy, mute your mic, please. All right. Please mute your mic. So understand key players. Who are the key players? These are the people that actually moves the market, the financial market. In each of these financial markets, we have different names for them. I remember I said the beginners should message me so that I'll be able to give them a PDF. I give them I guess I give them several PDFs. I don't know, links and PDF like that. Each of those things are different PDFs. So, and in one of those links, there is a particular PDF that talks about forex or trading terminologies. Yes, trading terminologies. So when you read the trading terminologies, you understand some things. And by now, I believe you should have be familiar with the trading terminology you'll be using. So that's why I said before the class, message me so I'll give you some PDFs to use and get familiarized with, so that at least if you are saying A, you won't be like what are you talking about, or you'll be lost or whatsoever. So the people that the key players of forex, they call them the market makers or the big boys. You understand? Those are the people that actually trade, all the institutional traders, the hedge fund traders, and the likes. Why in crypto they call them waves? They have different names for them. So do well to message me on WhatsApp. So I'll send you the PDFs and you get familiar with them. So begin your journey with what? Confidence. So let's proceed. Let's proceed. So this is tonight's roadmap. The first one is understanding trading fundamentals, meaning trading basics. So what is trading? You understand, you go through what trading is, or go to the core differences between the speculators and hedging. This hedging is what most people think trading is. Most people think trading is just all about hedging. Meanwhile, it is not. It is not. Well, let's hope our time will permit. We have the market landscape and participants. That is, you take a glance at forex, stock, and crypto, and who moves this market. Just what we have actually discussed, not quite long. Just proceed. They will take a good look at brokers, accounts, and platforms. That is, we'll take close details. We are going to know how to choose good brokers, and when you choose a good broker, your account type, then your trading tools. These are what we are going to be looking into this night. Hopefully, our time will permit us. to next step, that is actionable steps to set up your demo accounts based on just because you're a beginner. So your demo account or no deposit bonus or whatsoever, prop firm, your life account, and begin trading your whatsoever. So what is trading? As simple as it is, trading is the act of exchanging financial assets like currency. See, how will I say it? You don't this today's class, you don't necessarily need to start memorizing whatsoever all these definitions, and the major thing is just pay attention and pick the little you can pick. It is more of psychology than memorizing whatsoever. Do you understand? So just pick the little you can pick. When we get to the stages that we say it is very, very important, you pay attention. Meanwhile, these are also very, very important so that when you get to the places you will need it, you won't be confused or be asking your mates that actually attended the class with you, what is this? What is this? No, you won't know that. So trading is the act of exchanging financial assets like currency, stocks, or commodity to profit from their price movements. To profit from what? From their price movement. It's about buying low, that they will see. Sorry. It's about buying low. These are trading parameters. It's about buying low. Let's assume, okay, in trading we talk more on about dollars. This is your dollar. We have $1. We have, sorry, Pam, don't just pardon my writing, I beg. $5. We have $10. We also have here let me say $15. Do you understand? So here says we are buying low and then what, selling high, or selling high and what, buying low. Let's assume we have these assets. Let me say an orange. We have an orange and the orange is at $10. You want to buy one orange at what, $10. After you've gotten the one orange for the price of $10, as a good business person, if you want to sell this orange, let's assume, okay, based, when you want to buy, let me say, rice, beans, your normal commodity in the market, the prices are always different. It fluctuates. Today you get to the market, you say you want to buy rice. One bag of rice might be 80,000 naira this week. While when you get to the market next week, you'll be hearing something like 90,000 naira. When you get to the market the next following week, you're hearing something like 65k. It keeps changing, it keeps what, fluctuating. So the same thing here. So let me say on Monday, you bought one orange at 10,000, what am I saying? $10. Then you went to the same market, then you want to sell it. When on getting there, that was on Friday, you notice that this same orange you bought at $10 is now being sold at $15. What will you do? Will you buy, or you will want to sell that one orange you have? As a business minded person or a well oriented person that understands business, you will not want to buy any other orange at this price again, because you already understand that the initial price was, somebody is writing on the screen, please. The initial price was at $10. So if you are going to the market to buy another orange of $15, it means you have missed the chance of buying the same orange at $10. That means you are losing $5. So what are you going to do when you get to the market and you notice that the price is at $15? You will sell that one orange. This is just the basic thing you are doing. Let me take it again. You bought this price here at $10. Then on Monday, the price fluctuated to $15. What are you meant to do? Are you meant to buy more? No. this is not the best place to buy, because you know that there's every certainty that the price might still come back to $1. So you sell once you see that you've gotten your $5 profits, you sell. So you sell at $15. Then maybe on Saturday and whatsoever, the price came back to $5. What will you do? You know, you've actually sold one orange here at $15. You would have what, plus $5 as your profits. Do you understand? That means your $10 is still with you. Then you now have extra $5. Now you went to that same market and you got to understand that this same orange you bought at $10 or you sold at $15 is now being sold at $5. What will you do? Will you still sell? No, you will buy. So this is the ideology here that says buying low and what, selling high. So when we get to $5, you buy. You buy there. Do you understand? You buy there. So we have 10 minutes more. Let's quickly rush out. You buy at $5. Then when the price increases again to, let me say, $10 or $15 to your point of satisfaction based on your greed, you can now decide to sell again to what, get your profit. That is just the basic and the gospel truth about trading. That is what we are all doing. You have two objectives. You have two basic objectives in trading, and those two objectives are just to what, either buy or to what, to sell. As simple as that. To buy or to sell. Now, our focus as speculators is that we aim to predict and capitalize on future price change or changes. This differs from hedging, where businesses uses financial instruments to offset potential losses from adverse price movement. I'll explain this one later on because it's going to take our time. How to hedge. Hedge simply means when you have a particular asset, you are buying at the same time and you are selling at the same time, just to cut out your losses. I will explain that that is not necessary. You are not gambling here. So hedging is gambling. That is what most people think trading is. They think trading is about gambling. No, it is not gambling. It is about informed and well-educated price predictions. So this is FX trading. That is Forex. Forex is the global decentralized market. We have two types of markets. We have the centralized market and the decentralized market. Forex falls under the decentralized market for exchanging cryptocurrencies. Sorry, for exchanging currencies, not cryptocurrencies. So Forex is a global decentralized market for exchanging currencies, and it operates 24 hours a day, 5 days a week. So from Saturday and Sunday, you cannot trade Forex, but you can trade Forex from Monday, Tuesday, Wednesday, Thursday, and Friday. However, your crypto, you can trade crypto. Okay, let me go to stock before I move. Okay, then we said making it the most liquid. That means it has the highest amount of money in Forex. Like currently, it should be $7.5 trillion. It should be above $7.5 trillion now per day that Forex market actually remits. Do you understand? So it makes it the biggest decentralized market in the world. So stock represents ownerships of companies traded on centralized exchange. I'll be explaining all these ones maybe tomorrow. I'll explain the difference between decentralized market and centralized market. It's not really difficult, it's just English, don't worry. So traded on centralized exchanges with specific hours, value tied to company performance and investors sentiment. I have less than 7 minutes, but that's I have to be very, very fast. So on Thursday, we'll be having our next class. We'll start from here, then explain further. You might be using, what is it called? Zoom or the other Google Meets. Hopefully, let's just still watch. So, market at a glance, we are looking into crypto now. So, crypto is a digital asset built on blockchain technology, trades 24/7. That means every day, no break, no stop. And it's known for higher volatility. What is volatility? The difference between volume or liquid and volatility is that volatility, you could just see sudden price movement, something like poof, something like this. You could see a balanced price movement like this before, I something like this. But all of a sudden, you just see a dump, boom, based on whales action, perhaps moving particular token or currency, especially Bitcoin. I'm not talking about crypto yet. But I'm just trying to explain what we mean by volatility and liquid. Liquid simply means more money, more money. Then volatility simply means it could easily price change can be very, very fast and sudden. All of a sudden, you just see something, boom, something like this. You now see something like this, then go up like so. All right, that is one thing about trading crypto. Very, very simple. All right, so still a relatively new and evolving asset class. That means it's new. Of course, it's new. I guess crypto started what year? 2009. I guess it was Bitcoin became very, very popular 2010. So I guess it should be 2009. So let's go. While we focus on Forex, many lessons learned here are universally applicable across all markets. Like I've said before, everything we are learning here are all applied in every kind of market you want to trade. So we have why price moves, we have order flow. Don't feel overwhelmed, especially the beginners here. Don't feel overwhelmed. Don't worry. This is just I never knew I would talk this much or use. I will just say 40 minutes. We're done with the introduction. But the next one will be using more than 40 minutes. So make sure you bring your jota and get set. After this introduction class, we are starting officially. We won't be waiting for anybody. There won't be any need for any introduction again and whatsoever. We'll just kickstart immediately. So if there is any place I think there is need for emphasis, I will definitely emphasize. So let's just continue. We have why price move, order flow. Order flow is the basic imbalance of buy orders versus sell orders. When buying pressure exceeds selling pressure, price rise and vice versa. Let's assume in the market we have. Okay, let me give you this psychological stuff. Trading is, as how will I say, it's just like a tug of war. Or let me say, don't let me use tug of war. Let me say it's just like you are in a courtroom, and we have the prosecutors and the executors, defendants, somebody that is defending somebody, and we have someone that they are prosecuting. So it means these two persons, they are opposites of themselves, meaning they will bring their own arguments. Let me bring this into bigger screen. All right, so we have the buy side and we have the sell side. This is the buy side, this is the sell side. So the buyers, we have their own arguments, while the sellers, we also have their own argument. So it is you as a trader, you are now the judge. Do you understand? You are going to listen to the arguments of the buyers and also listen to the arguments of the sellers. It is now your duty to scrutinize with your discernment. After you've scrutinized and you've actually put into consideration what buyers have said and what sellers have said, you will now say, okay, I guess based on this argument, I think the buyers won the case. What does this mean in chat? When you are chatting or when you are analyzing your whatsoever, either currency, crypto or Forex or whatsoever, the buy side have their own arguments. How are you going to be able to interpret this argument on the chart? How are you going to interpret this argument on the chart? That is what we are going to be doing. That's why we are called technical analysis. That's why I call what technical analyst. You're able to see when you see charts, you're able to say, okay, this is what the buyers are saying. Now, this is what the sellers are saying. So when you are able to interpret what the buyers are saying, and what the sellers are saying, you bring them together and scale. After you've scaled, you think, okay, based on what I've seen here, the buyers has 90% argument or positive argument or valid argument, while the sellers has 10% valid argument. Who do you think won here? Is the buyers. So you'll be looking for what buying opportunities, meaning you want to buy at this current price or you want to buy at a particular price you've what predetermined. Do you understand? So this ideology will help you see the market in a more clearer way. So your ability to be able to interpret what the chart presents to you will actually help you. It's actually going to go a very, very long way. It actually goes a long way. So this, like I've said, this is just pure introduction. So I will make a video on how to